Hi everyone, welcome to the weekend stock talk edition. So, what a move by broad markets once again from the stock talk that I presented yesterday. And we have continuation by the bulls to lift the markets higher. And for what it's worth, I'm going to be saying this, right? It's bullish until it isn't. And what we've noticed, and this is something that I've mentioned in the past few videos, is that when we have a series of green candles, we know that the bulls are certainly in control. When we have a series of red candles, the bears are in control. But regardless, the market is resilient. The market is healthy long term, which means it's unlikely that we're going to go to last year's lows or lower, as many of other people have noticed, and it is more likely that we push towards all-time highs. But before we talk about all-time highs and whatnot, let's talk about the trend short term. So I thank everyone for commenting on the last video. So got Rico back, Space Ghost, Sam, Steve, Paul, Coolio. We'll tackle some of those tickers in a moment near the end of the video, so stay tuned. S&P 500 daily time frame shows you that it is green until it isn't, right? Once we have the first red daily candle, then we can say, hey, short term, bears might be in control again. But for now, this is a nice, solid move back to the upside, which I do like. Now, whether you're in it or you're not in it thinking there's another down move, that's up to you. But the trend is the trend until it isn't. And right now, we have a quick move. And what I mean by these quick moves is, look, this took 4 green days to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 11 days, 11 trading days, 4 green candles to negate 11 days in which the markets have moved lower. That is a powerful move. That is a solid start for broad markets. Now, where is our resistance? Here is a resistance, right? When we get over the 50, I want everyone to notice here that we're not clear. It's not all clear once we break over the 50. Actually, it signals to me, hey, now really be careful because we're over the 50 period. Hey, be careful now because at this point, the markets can turn its head in the next few days, okay? So while in the medium and long term, I think all is good and all is well in markets. Right now, we've gone up quite a bit. It can go higher until we see that red candle, but when we first see that red daily candle, we have to place a little bit of caution. That resistance is at 288.38 currently, and that continuously has been playing as a resistance right now. So we're pretty much right at resistance, and we would have to monitor that in the next few days. Aside from that, if we can break over that resistance, there's not that much resistance from here on to the all-time highs. So we're getting close. If you can imagine, we're back at 287.65. It was a very solid week by broad markets, and I wouldn't look for this to continue in this sort of shape and magnitude in the next few weeks, but I'd look for a little bit of consolidation to down moves. But again, in the very short term, I'd look for upside until we can form the red daily time frame or red daily candle. When we look at TVIX, you can see TVIX actually held up a little bit well, which is interesting for a day in which the indices went up over 1%, right? The TVIX, which is a gauge for fear, went up a little bit as well. If you imagine, if I told you that all the indices went up 1% or more, you'd say TVIX, that one must have gone down at least 5%, right? But instead it went up. So there is a little bit of more fear in the markets. People are thinking that there will be a pullback. One side will be correct, but the thing is, so far in the broad charts for broad markets, we don't have a sign of a red day yet. And because we don't have a sign of a red day yet, that is going to take precedence over TVIX, if you just think about that. So TVIX, for what it's worth, is still on a downtrend until it isn't, and that we would see that after the fact, first in a shift in market momentum on the S&P 500. So that is TVIX daily time frame. We'll take a look at crude oil. We have crude oil hitting support, coming off of support, and crude oil is looking good. Right now, this is on a short-term uptrend. I'm liking crude oil. Look for resistance, again, to be around $56 for crude oil as the 20-period moving average curves lower. But this is good. I'm glad that crude oil held a major support this time around, and it has reversed course. How do you know it has reversed course? You can see a series of 2 green candles, and this candle encapsulated the previous red candle, showing that this is a very good start by crude oil back to the upside. And I like this. So, and I like how broad markets and crude oil are going hand in hand to the upside. That's what we want to see. So crude oil looking good. For natural gas, I think right now what we're seeing here is we're still a little bit away from the 20-period moving average. So while all the trends for natural gas continues to be pushing lower, wouldn't be surprised since we get a little bit overstretched below the 20 for a bounce towards the 20 before this trend continues lower. But this is on a downtrend for what it's worth. So got to be cautious here in natural gas. With gold futures, gold continues to be stuck right at my resistance. So that resistance is 1346, and that next resistance, if we can break over, is 1363. The thing about this is we mentioned in the past that this gold needs to consolidate a little bit. That means coming back towards the 20-period moving average because we're still a little bit far away. We actually closed right at resistance today. So yes, if it wants to push higher, it can. We have a series of green candles, but it needs to cool off a little bit. It needs to cool off and go to the right perhaps a little bit before that next push higher, if it can do that. But gold continuously shows strength in the short term. In the medium long term, I think it's pretty questionable here which direction it will go. But for now, it is on a short term uptrend. All right, let's talk about some of the tickers that were posted yesterday. So Rico, thank you for your comment. Giants, good to see you. Space Ghost, AMD is the best. AMD, this one has been moving. I think AMD went up 7% yesterday. Let's take a look. Oh, interesting. Would you look at that? So AMD is moving past its resistance. This is a very strong resistance. So I would like to see some more follow through, but we're at 32.41. You have to be a little bit careful here because on this resistance, it spans from I think 10 years ago or maybe 20 years ago, long time ago. And this is a very strong resistance. And this is a resistance range, right? So if we can keep above this level for a period of a month, that would be a massive breakout by AMD. I agree. So right now, just notice that this is resistance until it isn't. And I would give this a month, I think, to say that this isn't a resistance. But this looks promising because of look at the time that we consolidated here for AMD, and now there is a rush to the upside. So, I see both ways, but I like the positive signs for AMD. Space goes, yeah. Sam, I think SPY will go to the top over 186 or 280. Wait, what? I think SPY will go to the top over 186. I think you meant 286. So if you said 286, I think that's where the 50-period moving average was situated. You're absolutely correct, and that's exactly what we did today. Very solid analysis. And I had a perception. My thought process was we're unlikely going to stop at the 50. And just, if you were digging deep into my thoughts and why I was thinking that, yesterday I told you that the 50-period moving average on this chart has not been acting as a significant level of resistance. When I look at the 50, it's popped over and then it's gone lower. It's popped over and then it's gone lower. We can pop over and then go lower. So the 50 isn't that significant, but it's when we get over the 50, that's when things can get a little bit questionable at that point, right? So a good observation. I like it, Sam. Steve, Killa, Kevin, thank you. You're welcome. Neo, Paul. All right, so let's take a look at Neo. This is one of the IPOs that came out. Yeah, I remember this was last year. Wow, it's already been almost a year since this one came out. And this was extremely hyped, I think, because of the let's see, probably because the first 2 days how hyped it was, and then it really took a ugly turn back to the downside. So where does this look? This doesn't look good. Let me just tell you that this does not look good. If you looked at this chart, there is no support on this chart. Because the technical support that was 5.93 was broken on these series of days right here. And once it's broken, there is no support until we can see a base. So for what it's worth, there is no support for this chart. It's a very hard one to swing long because you would be guessing at the bottom. I'd like to see a bottom form, test it one more time before we call that the actual bottom. So you got to be very careful here. I don't see a bottom for this one. So this is on a downtrend and short term. This continues to be on a downtrend, even though today it pushed up 4%. This continues to be on a downtrend. And even if it gets to the 20, I'm still going to say this is on a downtrend, right? Because we have to see way more candles than that to say that this is going to reverse course. All right. Coolio, yep, we talked a little bit about that. And then, all right, we'll talk a little about Uber. Where are we at Uber? Okay, so Uber, so interesting move again, recent IPO. This one is one that I think started at $45, came down upon market volatility a little bit, came up, consolidated, moved up again. So this is on an uptrend, right? Uber is on an uptrend. Now, where are we right now with respect to the 20? We're a little bit further away. When we got further away, we consolidated to the right, right? If we go up again, if this is a bull flag or a typical bull flag action, which very well could be, we consolidate to the right before that next push higher. Okay, so that's Uber for you, and here's the 20, which is at $42. So it might, and it has a good chance to come to $42, maybe a little bit higher, $42.50 before that next push higher. But this is a good chart. This chart is on a short-term uptrend. We don't have that many candles to work with right now, but this is on a short-term uptrend, so I like it. This chart does look good, but it does need to consolidate just a little bit, which it's doing right now. So I like it. It's good. Okay, and thank you everyone. I hope you enjoyed your trading day this week. Again, I'm happy to see that the markets are moving higher. And everyone, I think, should be. I don't think everyone really wants to see the stock market move lower or when people start putting out the words crash, no one wants to hear those words because, we want our investments, we want those companies to eventually do well and pay off, and we participate in those kind of moves. I think that's just my feeling. So I'm not sure why anyone wants the stock market to tumble. But with that, that's it for the S&P 500. That's it for my analysis for this week. Hope you enjoyed it. If you like this video. As I always say, if you don't like it, hit that thumbs down button and check out the course. I'm always on Discord talking to the members daily basis. So, all right. Talk to you all later.